Good afternoon, traders. John Caruso coming to you here for the afternoon of September 16th with your currency report for today. We had a pretty wild overnight. We did see, actually, we'll look at the S&P first. We did see the S&P gap up about 11 points in the overnight. We saw that carry through into the early morning hours. I believe we hit a high in the December S&P at 1703.75. Looking at the currencies, we actually did see the U.S. dollar gap lower. I believe it was about a 30-point gap down in the U.S. dollar, while we saw all major foreign currencies gap higher. News over the weekend was that one of the Fed presidents, Larry Summers, did withdraw his name out of the hat to become next Fed chairman. To me, this really isn't big news. I don't believe he was a favorite to gain the Fed chairman position. So this is kind of it comes to me as a shock, and we are starting to see the S&P drift back down to possibly fill that gap in tonight going into tomorrow. Same with the U.S. dollar. We did see the U.S. dollar rally off of its lows, and that's working its way back up. Right now, the dollar, as we stand, sits at about 81.43, still down 20 points of the day, but we did make a low at 81.13.5. So we have recouped much of what it lost in the overnight. Based on the news that we saw over the weekend. This week it's all about the U.S. Fed. The Fed's come out. They go into a two-day meeting starting tomorrow, and they come out with their interest rate decision on Wednesday. It's all about will the Feds taper? Will they not taper? How much are they going to taper? I think it's largely priced in that they will be tapering come Wednesday on their quantitative easing program. But the question is, are we going to get 10 billion? Are we going to get 20 billion? That remains to be the big question moving forward. Looking at the U.S. dollar, trading the U.S. dollar, I think it's important to look at the bond yields throughout the intraday session. Obviously, the U.S. dollar tracks interest rates very, very closely. We did see the bond market gap higher in the overnight, and then we did see bond prices fall back where interest rates rose throughout the session, which also created the comeback that we saw in the U.S. dollar. So I think it's important to watch the bond yields very closely, especially over the next couple of days as to the direction you trade the U.S. dollar. But we'll have more for you next week. As always, you can feel free to give me a call at the desk, 800-669-5354. And as always, trading futures and options carries risk. It may not be suitable for all investors.